Okay, cool. So this is going to be the easiest way to day trade. So let me go ahead and show you here. So as you can go ahead and see, price decided to run upward and create resistance at this purple line here. I'm going to break down and show you guys the easiest way to show you the entry. So get ready. So price decided to run up to the purple line pre-market, fell down. Ran up to it while markets open, fell down. As we could see over here, market had enough. Market decided to finally get above the purple line. As we can see, break. And as we can see, resistance then turned into an area of resistance turned into support. So as we can see from over here, boom, price decided to go ahead and fall downward near this purple line. And then price decided to go ahead, we'll say this whole area, we'll grab from this resistance all the way up here, right? Boom. So let's say this will be the entry point. Down here, stop loss. Okay. As we can see, we would have got a 1 to 4 trade. So once the resistance got broken, okay, and the reason why our stop loss would be here is because of the structure that's going to be right here. And we can go ahead and see once resistance got broken, yes. So after resistance gets broken, yes, it then turns into support. So as you can see, price is not going to continuously fall from the same area over and over again. What's going to happen is price is eventually going to get fed up with it, break above the area, okay? And then we're going to go ahead and get some break and retest. So once again, price is not going to continuously zigzag and fall from this area over and over again. That's not methodical. That's not how trading works. Trading is an upwards chart. And the only way trading can work is if resistance turns into support. And that is how the candlestick chart moves in a progressive upwards formation. As you can see, that's exactly what happened, just like the drawing. Price came up, fell, price got above it, resistance to support, and we stopped up here. Okay? So we just keep it simple. So all we're doing is looking for areas where price you just literally have the lines, and the lines will already be here. You see how price decided to stop at this next line? Exactly. Boom. So your lines are going to be here for a reason. So once I slow it down, I'm going to show you an easy way to find your take profit, find your stop loss, and find entries. It's going to be the easiest way to trade in the world. And as we can go and see, even all the way up here, you see how price literally stopped perfectly at this line? I don't lie to you. I'm telling you, all these zones here are going to be here for your take profit. This is an easy, simple way to trade. I'm just making it as easy as possible. All right, so let's talk about how to find the entry. So step 1 on how to go ahead and find the entry. Okay. So step 1 to finding the entry, use the daily time frame. All right, you're going to go ahead and be using the daily time frame. The daily time frame. Okay. And the reason why we're going to be using the daily time frame is because on the daily time frame, you're going to be able to see all the price action that you need to see. Okay. So as you can see on one screen of the daily, you can pretty much see almost a decade worth of price action. If you zoom out your mouse all the way, you can see everything. Okay. Over a decade worth of price action. Now, if I'm on my 1 minute time frame and I'm zoomed all the way out, I can literally only see like 6 days ago. That's not enough information. So that's exactly why we're going to be utilizing the daily time frame. Okay? That's why we're going to be using the daily time frame. So the daily time frame is going to be used for our entries because we're able to see more price action information. And everything that happens from the left, okay, is reactive of everything that's happening to the right. So if price months ago made some resistance and then price decided to fall downward from there, price got above that resistance and turned into support. The reason why that support would be made is because resistance turned into support. And just like we can go ahead and put it in a methodical sense, we can assume that support turns into resistance. All right. So everything that you see from the left is reactive to now. Okay. All the price action and everything that you see to the left is going to be reactive to what you see right now today. This is going to be the easiest way to get entries. And with your schedule as well too, you're going to be able to literally just get on every single morning and farm bread. You literally just have to wait for price to react to the lines, take it to the next line, close. That's it. That's it. Stop loss or take profit. It's extremely methodical. It's extremely easy. Let's do this. So boom. What's current price right now? No, it's 0.35. You're okay. 0.35. Nice try. Yeah, if it's hard to see on screen share, I understand. All fine. But yeah, great job. So 433.35. So we're going to go ahead and we're going to look, if we're looking for a long trade, right? And if we're looking for a long trade, we're waiting for resistance to be broken and we're waiting for resistance to turn into support. So in order to look for a long trade, right? Then what we're going to go ahead and do is get on the daily time frame and you're going to go ahead and get your horizontal line out. Once your horizontal line is out, and this is also included in the stack mode trading course too, and you're going to go ahead and get your horizontal line and look above current price. If you're looking for a long trade, meaning you're waiting for an area of resistance to be broken and you're waiting for resistance to turn into support, that is a long trade. Okay, that's a long trade. A long trade is when an area of resistance gets broken and turns into support and continues in an upward direction. That's a long trade. Okay, so boom. In order to find an upwards trade, and as we get into the options terminology, that's going to be called a calls option. Then what we're going to go ahead and do is get on at around 9 o'clock or before market opens. It's going to be the best time to do this. Once again, this is going to be on YouTube, pre-recorded. Boom. So let's go ahead and do this here. So we're going to go ahead and look above current price and mark lines on the bottom wicks. So just like we know, candlesticks have two sides of them. Okay, candlesticks have the bottom wick and then they have a top wick. Every single candlestick has a bottom wick and a top wick. Okay, but if we're looking for a long trade, we're only going to be paying attention to the bottom wicks, bottom wicks, bottom wicks, bottom wicks, bottom wicks, bottom wicks. As you can go ahead and see here, this is all we're going to be paying attention to if we're looking for a long upward direction trade where we're waiting for resistance to be created and then we're waiting for resistance to turn into support. So we're waiting for price to run into one of these lines, create resistance, fall down after the resistance is created at one of these lines. It'll break, we wait for support to hold it and take it back up. Okay, so once again, in order to find a long trade, we're going to look at current price, get on the daily time frame, and we're going to be putting lines at the bottom wicks on the daily time frame only. And you're going to zoom out, make sure you start from left to right. So what's current price? Current price is 433.35. So there's no reason for me to start down here because that's underneath current price. I'm going to look above current price. Okay, above current price at 433.35. I'm going to look above that and put lines at the bottom wicks. And I'm going to do that until I get to today's date. So I'm going to start all the way to the left where current price has bottom wicks above it. Okay, no matter the date, just start all the way to the left because price action works from left to right. Okay, so we're going to start all the way to the left, 433.35, look above it, and we're going to be putting lines at only the bottom wicks, only the bottom wicks. Okay, and you're going to put lines at each and every single bottom wick until you get to today's date. And you can go as high as you want, and I recommend when you click the lines too, to lock them up. This way you don't move anything. Yep, for long trades. Yep, and then after this we'll go over short trades. But yes, bottom wicks are going to be for long trades. So bottom wick, cool. I'm going to go ahead and keep going from left to right and making sure I don't miss any bottom wicks above current price. I'm only looking above current price for a long trade. Okay, and I'm putting lines at every bottom wick above current price. You can go as high as you want, but your day trades won't be like a million points. But you can go as high as you want. What you're going to notice too is that the more lines you put down, you're going to notice that lines are going to be able to share lines as well too. So you're going to see certain areas being reacted off of multiple times. So that's going to be very, very nice to verify that that's a strong level as well too. Nothing in trading is random. Price can never be random. Okay. So we started all the way from the left, looked above current price. So above current price, there's still some bottom wicks. Even though this is in June, above current price, there's still some bottom wicks. So I put lines at all the bottom wicks above current price. And I did that until today's date. So the furthest most right candlestick on any time frame is going to be today's candlestick. So this is today, Wednesday. Okay. So if I go ahead and get on my smaller time frame, 5 minute, what do I see here? What do I see here? What is this? What is this? An area of resistance, correct? Okay. So the work is literally done for you. You don't have to do anything difficult. You don't have to make it hard. All you have to do is wait for that area of resistance to be broken and wait for it to turn into support and go ahead and just get in. That's it. That's it. So you see how just using that trick, we were able to go ahead and find the exact entry. Yes, because this is going to be the highest level of resistance before price came down here. So all we have to do is wait for price to break above this, and you could take it to pretty much any line that you want. Okay? You can maybe take it to up here. And that's a lot of money. Very, very easily, you're going to be able to find entries. Okay? This is going to be the easiest, cleanest way to go ahead and find entries. All right? So boom. So you could either do it like that, and there's going to be a way to find short trades. So remember, for long trades, you're going to be on your daily time frame. Look above current price. You're going to be marking lines on the bottom wicks on the daily. Start from left to right until current price is relevant. Okay? Then from there, get on your 5 minute time frame. Analyze structure, and you can go ahead and take your trade from there. Okay? So that's going to be the easiest way to go ahead and find a long trade. So all I would go ahead and do, put my entry here, can make your stop loss maybe like right here, for example, take profit, and stop loss smaller. Stop loss right here, maybe by these resistances here, and boom, that'd be a quick 1 to 2, maybe smaller stop loss if you want. Because the thing about these trades is that it should be clean, and they should be happening. And as you can see, there's more resistance over here too. So this is going to be the easiest way to find the best and cleanest levels, okay? So I was just able to deduce the fact that resistance turns into support, and support that turns into resistance, use the daily time frame, and created a methodology that pretty much just has the confluence run into the correct price action every single day, just because of that simple understanding that resistance turns into support and support turns into resistance. So now if I'm looking for a downside trade, right, I'm going to be waiting for support to turn into resistance. So what I'm going to go ahead and do is I'm going to do the opposite of the long trade. So I'm going to look below exactly. I'm going to look below current price, and I'm going to go ahead and put lines below current price for a short trade, below current price. Yep. And this is pretty much all it is. This is all it comes to. Boom. Look below current price. Go ahead and only put lines at the tops of the daily candles. Go from left to right. And let's try not to miss anything. Go from left to right below current price. Okay. Left to right. And if you want a short trade, you're going to be looking underneath current price and only putting lines at the top of the candlesticks. Then from there, you'll get on your 5 minute time frame. And as you can see, what do you see? Support. You see how obvious the support is created? Boom. You see how the exact wicks are created. I've created the best system in the entire world. No one trades like this. But you will get the best entries, the highest volume day trade entries every single day trading like this. And that's because of the simple fact that if you deduce that resistance turns into support and support turns into resistance, then you're going to be able to understand how trading works. And all you're doing is waiting for price to just break and retest from these areas. And that's all you're doing. Taking your trade, taking your profits. The levels are here for you. The work is done for you. All you have to do is put down the lines and just wait for price to reach those lines. And that's it. Keep it simple. All right. So that's going to go ahead and be that. That's going to be the easiest way to trade. Let me go ahead and